Welcome to Front Range Facts. This is Anthony Meisner.
And this is Jim Merrion. We wanted to give you our download for our July 2020 podcast and videocast here. And, we've seen just crazy ups and downs in this coronavirus recovery market. And obviously prior to that, earlier in the year. And we wanted to talk a little bit now about just some of the national trends that we've been seeing. And nothing really illustrates it better than what Realtor.com has been doing, which is creating this coronavirus housing market recovery index. And what they've saw for the last week of July is that the index is now essentially 3.7% above the pre-COVID baseline in all metrics. So we're just seeing the market really leap to a huge recovery. And regionally, the West and Northeast continued to lead the recovery with the overall index, now visibly above that pre-COVID mark. And the recovery is not uniform across the country. There's certainly some places that are hurting more than others. When you have like Georgia had a 41% unemployment rate at one point during the spring, it certainly is going to take a little longer for some of those markets to rebound. But in 30 of the 50 largest markets, the recovery is in place. And, no one's shown it better than New York City, which, New York State in general, which had to go into complete lockdown due to the sheer number of deaths and coronavirus cases. And then we're also seeing places like Boston, Philadelphia, Seattle, and Las Vegas really leap to that recovery forefront as well. And then when you look at, national inventory, I think what everybody in the country that I'm talking to, realtor-wise, is remarking is how low the inventory is. We were already entering 2020 as a very, very low inventory year, but to see it then drop 32.6% year over year is just phenomenal. And, in the largest markets, it's down about almost 35%. So there is no buyer's market in most places. You're not going to get the COVID special on your home. It's just a really brutal environment to be a buyer and a very, very favorable environment to be a seller. And, the inventory of newly listed properties declined by 13.4% nationally over the past year, as well as also in the largest markets. The other thing that, obviously with supply and demand, that's very clear is that your prices are going to go up when your supply is down. And that was evident in the July national median listing price of $349,000, which is up 8.5% year over year. And prices rose 7.8% in the largest markets in the country. And, the time on market is still staying the same. We have, usually 30 to 45 days to close a property. So it essentially means that, most homes, the average home is going under contract in the first 15 or 30 days on the market. In typical homes spend about 1 day on the market less than compared to last year in some of the largest markets. And just the last piece of national news that really is interesting is because showings are what our closed business is, 60 to 90 days out typically. And so Showing Time, which is the largest showing scheduling company in the country, they do about probably 75% of all showings nationwide. They track every month what their different regions are doing, and nationally they're looking at the United States as seeing about a 50% increase in showing activity for June. And then in the places like the Northeast, which were heavily shut down before, that has jumped up to 67%. So everywhere in the country is just seeing a massive surge in recovery.
We, of course, want to do a nice little shameless plug and let you know who we are now, since, we got through our national news, and we're going to dive in all the way from the top to Colorado to local news for the rest of you guys for the rest of the time. I'm Anthony Meisner. I'm in sales at Land Title Guarantee Company, mostly out of the Boulder market. You can catch me at 303-968-9868, or always emailing me at ameisner@ltgc.com if you have any questions.
And I'm Jim Merrion. I'm a realtor with Coldwell Banker in Boulder, Colorado. I go about an hour in every direction. So our Colorado Front Range, which spans from Fort Collins down to Colorado Springs, there's a good chunk of it that I'm diving into on a daily basis. And you can always reach me on my cell at 303-548-0243, or you can hit me up with an email at jim@ourcoloradohomes.com.
Don't forget, every month you can always catch us at frontrangefacts@gmail.com for the podcast here. We're happy to share all of the local insights and local stats and the slide deck that we go through. And if you just have any questions that are burning and itching you to hear about on the next month's podcast, or if you just want some clarification on something, Jim and I are always here at your disposal. Don't forget to check out our other podcast, Get Real with Blockchain. Jim and I have been doing some stuff in the real estate and blockchain space for quite some time now, and we have that podcast running even longer than this one. So tune in as well.
Yeah, and we had a really good one, the last one that we recorded with Ideon. So check it out, everybody.
Colorado news is really exciting. Interestingly enough, it is trending just like the rest of the national market in many cases. In June, the number of homes listed for sale across Colorado fell about 39%, which is pretty similar to the national average. According to the report, Colorado Association of Realtors, with the stay-at-home order lifted, buyers are buying the limited housing inventory and pushing the numbers of homes under contracts up more than 30% from a year ago. That's up to almost 11,650 homes went under contract last month.
Yeah, and the median list price is obviously just like nationwide has jumped to 8.9% year over year. While the days on market is still very aggressively flat with 36 days on market. And I think too what's interesting, Anthony, is with showing time, obviously they can talk about national trends, regional trends. This year they've also implemented their COVID tracker, as they call it, which you're able to see on a statewide level, much more granular level of detail. And what we have on the slide here is just what shows that they use the first week of January as a baseline of 0%, basically. That's usually one of the slowest weeks of the year for showing activity nationwide. So it's a good starting point, and it's also conveniently enough the beginning of the calendar year. So they use that as the 0% baseline. And, as the folks at home are familiar with in past podcasts this year that we've done, the index dropped like a rock. But right now, what we've seen is the last few weeks of July, as well as some parts of June, where the market showing activity has just leapt above 2019 activity. And so, the weekly activity is basically about 13% higher than it was this time last year. So we usually see a bit of a summer slowdown, by the end of July. That's really not the case here. I think, Anthony, we nailed it on the head back when we were talking about this in probably like March for one of our podcasts, or April, where we were talking about how we expect the market to not be the typical, cycle. And we're going to see that, showing activity extend out into the late summer and probably even into the fall. And I think the trend here is very clear that we're definitely correct in that assumption. We're just seeing, continued strong activity with tons of active buyers on the market, and not enough sellers to feed that machine.
Absolutely. And as you guys will notice kind of throughout all of this, we're really expecting just an amazing third quarter. What these numbers in the showing traffic are telling us is that we should really outperform last year through, all the way into maybe October even, because with the 60 to 90 day view that showings kind of, push out, and that's the very leading indicator of the market. I would expect all the way into election season, you really see just some pretty strong real estate activity. I mean, even the other day we were looking, and you had a better chance of selling your home in July this year as you did in February. And that's just not the norm, right? Because of COVID, and because you guys can see the giant valley of demand that would usually take place in that March, April, May timeframe. And we're really just going to make up for that back into the third and fourth quarters. So exciting stuff going in, but it is a little frightening with the low inventory levels. And you can see that here, if you look at, this is statewide, if you look at the pendings and under contracts, they're up almost 33% from this time last year, year over year. But new listing activity is down about 8%. And this is detached single family. It is nice to see just the median sales and average sales prices continuing to rise. A lot of people didn't think that we were going to have that type of behavior this year because of COVID. And it's just really great to see just the strong inventory that is taking place, or strong appreciation in the strong market. I really think that real estate is going to be a major part of what pushes this country out of recession quicker than usual right now. The next thing you really wanted to look at was the townhouse and condo market. There's a pretty drastic difference between single family homes and condos right now. And there's always some difference, but because of COVID, it really seems like buyer behavior is much more driven towards those single family residences with a little more space. If you're looking at the pending and under contracts for townhouses, they're up 30% and 39 instead of 39%. And if you look at the active inventory levels, active inventory is only down 24% in townhouses versus if you look at the last slide, it was about 39%. So there's definitely some big swings and differences between attached and detached units right now, but it is fantastic to see that just real estate as a whole is booming. And that is really going to help drag us through this recession.
Yeah, and I think it's really more to the point too. It just shows the resiliency that we've been talking about is baked into this market, right? I mean, we have not had the fundamentals change at all as far as why this market is going to continue to remain strong. We've been talking about this all year, even through the pandemic shutdowns, that there's just so little inventory and so much pent-up demand in the market for good homes that there is no ability to really have a price squeeze on a macro level with properties. I mean, you might find someone who's desperate to sell and get really lucky, but it's a lottery play, at that point in time. For most of this, it's just the fundamentals are so solid that we have nowhere to go but up for the rest of this year, really.
Yeah. Well, lastly, we wanted to make sure you knew who we were. I'm Anthony Meisner with Land Title. And of course, the format of our podcast is national Colorado, and then we're going to get into local news, starting with the Denver metro area, all the way down to Colorado Springs and all the way up to Fort Collins. So stay tuned for all the local market information.
Yeah, absolutely. And, feel free to always reach us at frontrangefacts@gmail.com.
All right, starting at the top with the highlights for the Denver metro market. This is very similar to the state stuff, where we're really seeing the highest pending levels in recorded history, at least in the last decade. Year over year, we're up 21.3% in our under contracts and the pendings. Month over month, that's 12.7% above the May height that we thought was really just incredible to see how fast it bounced back. But you can really see some other things in the market that have been really interesting as well. Like the average sold price is up 2.1%, even after it took a decent dip through COVID because, people panicked and pulled back a little bit. If you look at attached units are also up even 0.5% over a year ago. So those are pretty good signs to show just how healthy the real estate market is. The other big takeaway I like to look at is we look at it by county level quite a bit. And Broomfield, it's amazing to me how much Broomfield bounces back and outperforms the rest of the Denver market year after year after year when we do this.
Yes. It's one of the reasons why I bought an investment property there a year and a half ago, 2 years ago. It's just you can't go wrong being right between Boulder and Denver.
No doubt about it.
Yeah, it's incredible jumps though for everybody there for sure. And even looking at the combined detached and detached. I mean, we've got just the active inventory continuing to decline, and which is remarkable. It's showing that there's certainly obviously people that are afraid to put their homes on the market, but I think a lot of it too is because there's just a lockdown on job transfers in general and people just working from home now. A whole undercurrent of any real estate market, of course, is job transfers. And when you don't have physical offices to go to, you completely cut out the need for someone to need to sell their house and move to, say, New Mexico or California or wherever it is. So I think that's part of the untold story, essentially, this market too. In long term, what is the impact going to be on things like that, where you have a whole aspect of the economy which no longer behaves the way it normally did in the past? So I think we're going to continue to see sellers not really need to sell quite as much. So
hopefully this puts some real pressure on the buyer or the builders out there, because as we've known for the last decade, we've been underbuilding by 10 to 20,000 homes a year every single year since about 2010. So that pent up demand of buyers is really just showing through with the lack of inventory right now. And as you guys can see, the green line here is inventory if you're tuning in with us over video. And those active levels are about as low as we've seen them. I mean, even through the recession, after all of those foreclosures and everything took place, I mean, those active levels are about as low as they can get. And then you show those under contract levels where things are spiked at abnormally high levels for under contracts because of all the pent up demand. I mean, this is just the perfect storm if you were a seller, right? If you want to put your home on the market, you're definitely going to get top dollar. It's just that's just the facts right now, and that leads to it. So the next one we really wanted to talk about here is month supply of inventory, and this is really more of a slide for people thinking about selling their homes, or if you're working with sellers and you're in the real estate field. Month supply of inventory measures just how much supply is on the market and how competitive it is going to be to sell your home. And at 1.29 months supply of inventory across the entire Denver metro area, it's just kind of ridiculous, right? We've seen it lower at times. Usually we see it lower in the springtime for sure. But for a July time period where the market's usually, or June time period, I guess, where the market's really kind of at its top, it's just about as low as we've seen it. And what that means is that sellers are going to be getting top dollar for their prices, and buyers are really going to have to compete. I mean, we're seeing this if you look at the days in the MLS. There is not a lot to look at, right? I mean, people are really competing on what comes on the market on that specific weekend. This days in the MLS really measures from the time that a home is listed to the time it goes under contract across the metro area. And we've seen it a little lower in past years, 2018, 2017 probably, where, we were seeing multiple offers and everything else. But all things considered, these numbers, they're pretty impressive, right? And they really do give us some signs as to how consumer behavior is going to have to take place. So,
Yeah,
Jim, you want
and
to chime in on a couple of these?
just to remind everyone at home, what we consider a balanced market is 6 months of inventory. Where you take 6 months to move all that inventory off the market if it were on and nothing else were to come on. And it's been 10 years since we've had that kind of market here in the Denver area. So back in the throes of the Great Recession, and so to have under 2 months definitely is very seller orientated, and it's not uncommon now for someone to be working with a buyer and line up, say, 5 showings on properties and have 2 or 3 of them under contract before you can even walk in the door to see them. It's just moving at such a fast clip these days. And I think what's even more challenging about this market than in 2014 or 15, when it was kind of similar in that huge demand, is that a lot of these offers now are happening in the first 24 hours, whereas back then we had all switched to essentially like a Thursday through Sunday showing window with wrapping up showings on a Sunday night and having your offer figured out by Monday. Right now what's happening is people are not really following that practice we did before, and they're just simply getting hit with 3 to 5 offers on the first or second day they're on the market, and they're just pulling the trigger on one of those then. So you're not maybe seeing the sheer number of offers because we're just not giving people time to put those in. But it's really challenging just to be able to get out there and see the homes you want to see and be able to write the offers on the homes you want to write without having any super pressure on you.
Absolutely. You can see just how much less sales we've had this year because of COVID, and how that's really going to change probably going forward because of the under contract numbers here. If you look at year over year change, most counties were down somewhere between, 15 and 35%. So across the metro area, we're really looking at only being down year over year in solds about 26%. But all things considered and everything looking at under contract numbers, I'd really expect that to bounce back. And actually, we will probably in 2020 outperform the year of 2019 just because we have so much time to catch up from that valley of a couple of months.
Yeah,
The one thing I really wanted to, I'm sorry, Jim, go ahead.
I think what's really remarkable about the slide is, April, which is the last bar on this graph here, is such a hot month always. And you can see that in the past years. And I think it's just worth pointing out to everybody that, there's about 1,400 less sold units, in April because of coronavirus, shutdowns than there was, the year prior, and, close to the same on the year prior to that. So, it's a trough that's rapidly moving upward.
So there's a couple of spots that we really wanted to talk about. And I think by price point, there's a few things that are worth noting. The reason that everyone's feeling so much pressure is because those median home values, those, 800,000 down, right? Those are the markets that are under just the most immense pressure, because what we're feeling and what we're seeing because of coronavirus is the mass population is realizing that either they love their house and they're staying put and they're not putting it on the market, or they absolutely do not have enough space and they are ready to move into something that is either their own, they were renting, or probably something that is bigger than what they had before. Maybe it has a yard, right? We're starting to see a lot of people leave some of the city centers and move into the suburban areas, especially the millennials for the first time. And what that's creating is this just incredibly low inventory levels in the lower price points. I mean, if you're in the entry level price points in the market, let's just say you're under 500,000 because that's a pretty good spot for entry level buyers. I mean, you're under 1 month supply of inventory. Pretty much everything that's coming on the market every month is leaving, right? Actually, less than 1 month. Every 3 weeks, the entire section of inventory that's available is cycling. So what that's doing is that's just creating so many bidding wars, so much push for prices to rise. And I think the biggest takeaway for this is if you are a person who wants to trade up into a bigger price point, let's just say you live in a $500,000 house right now, but interest rates are really low. It gives you a lot of buying power. You're thinking about moving up into 800. Well, the difference between a $500,000 house where you can sell anytime you put it on the market, and then actually go and look at some of the inventory where we're getting closer to a balanced market between that 800 and a million range, it really gives you the opportunity to really position yourself well as a buyer. So same thing goes if you're in a $1 million house, you want to move to a $2 million house. This is an incredible time where you don't usually see these big bridges in inventory levels like you do right now. So that's been exciting to see. And if we look at solds show basically the same thing, right? Luxury price points are lagging a little bit behind. There's not as many sales in the luxury markets as there has been in the median home value markets. But those 800,000 and below markets, I mean, they're just on fire.
Yeah, it really is. It's and I mean, any home that is got improvements made that looks fantastic in photos, good luck seeing it on the market for 2 weeks in a row. It's just this is one of those markets, nationwide. You read all these articles. It says that there's the only thing that gives 100% return on investment is a steel door for your front door, for whatever reason. But here in Colorado, pretty much anything you put in a kitchen or bathroom is gold, and 3 to 4x return on your investment. So yeah, I think you make some good points there, Anthony.
Absolutely. Don't forget, if you want to get a hold of us, you can always reach out to us here at the show at frontrangefacts@gmail.com. We're happy to share the slide deck with you, share some more local insights. And you can always catch me. I'm Anthony with Land Title on my cell phone at 303-968-9868.
And I'm Jim Merrion. You can reach me always at 303-548-0243, or feel free to email me if you don't like to talk at jim@ourcoloradohomes.com. And so let's look at our north to south picture of the Front Range, Anthony, going from Larimer County in the north down to El Paso in the south. And what is interesting about this is that there isn't anywhere in the state that isn't really seeing just a massive drop in inventory and a massive leap in sold and under contracts. And so Larimer is no different than others. There's 10% less listings, looking at June of 19 to June of 2020. So, 10% less. And even year to date, new listings are still down 4.5% for all single family homes. And then when you look at the inventory for new listings in townhomes and condos, it's almost a 20% drop from June of last year to June of this year. And we're still really trailing that inventory levels in those townhomes and condo markets by about 10.6% year to date. So the inventory, just like the nationwide trends, just like the statewide trends, is tough. It's a bleak outlook for that. And the solds have just leapt up quite a bit with, 18% leap from June of 19 to June of 2020 for single family homes, and a 13.5% increase on the townhomes and condos from that same time period. So, very strong market rebound. It's starting to reflect in the median sale price with both, metrics starting to creep up. We've seen a 5% leap in median sale price in townhomes and condos, from June of 19 to June of 2020, but the median sale price for single family has only gone up about 0.2%. But again, because June numbers were in the throes of, a shift in recovery, I think July, we're going to really start to see that needle move even more just due to the competitive nature of everything that's going on. Wouldn't you agree?
I agree. Weld County is really not very much different. I mean, it's just amazing to see. The one big difference in Weld County is inventory levels in the townhouse condo market do seem to be quite a bit better, but you have to remember there's just not a lot of townhouses and condos in Weld County, right? There's 112 of them on the market compared to 128. That's not a real big swing, but look at the swing in single family homes. It's very similar to Weld or to Larimer County. And same thing with the price increases, right? Everything's been pretty moderate. Everyone's kind of on the same track in Colorado. I just think there's a lot of demand coming into a state where you have a lot of outdoor activities right now. It's a really easy place to spend some quality time at home and spend some quality time on the trails and be close to proximity to things you could actually go and do since none of us can travel and get away. And I think that's just putting a lot of pressure on the Colorado market. We are seeing a lot of the same behaviors across the country, but looking at month supply of inventory up in Weld County, you're starting to see it dip below 2 months again. I mean, these are just wildly good seller markets if you're a seller. So be cautious of that if you're a buyer, but do understand what you're getting into. I mean, if you wanted to trade homes in any of these markets, it's pretty amazing just the potential that you have to do that. It is interesting to see just the sold listings are only up about 5% in single family in Weld County right now, and they're actually down in June for single family homes year over year. They're down about 5% in sold listings in the townhouse condo market. So that doesn't change a whole lot, but it is a little different than what we've seen in a lot of the other markets.
Yeah.
Of course, we could always roll into Boulder, where it is near and dear to Jim and I's heart, because it's where we usually reside and spend quite a bit of our time. So in Boulder County, I would expect to see Boulder County trend a lot like the Denver metro area, right? As Denver metro grows, Boulder kind of gets encompassed by it, but it is definitely more on the luxury side and the more expensive side of the town. But what you see in Boulder, same thing, right? Ultra low inventory levels, record high under contracts, and solds are lagging a little bit compared to where we were a year ago, but average sales prices have stayed pretty constant. I mean, you saw a 60% swing in Boulder County month over month from May to June, which is just unbelievable, right? And
That's
year over year contracts 20% above, and June is usually the number one month for under contracts. So the fact that we hit the 600 mark in under contracts for Boulder County, I just shake my head because we're dealing with volume issues that we've never seen before, and people just really want to live here. I mean, it's pretty apparent. So
Yeah,
it's
I think you also too. You made a good point when we were talking before the show began, Anthony, about how there's a lot of similarities, obviously, just from proximity wise to Denver and Boulder markets, but there's certainly some underpinnings in some of this Boulder County data that reflect the fact that it's a much higher price point, than just the rest of the counties in general. And they're the people that tend to have a little bit more flexibility with their decision making. They've got a little more cushion for the pushing, and so they were definitely a little more cautious, about leaping back in. And some of these are lagging indicators of where the rest of the market is. And also reflected in just the highest parts of the price points certainly have seen some shifts in what the normal trend data looks like.
absolutely. If you look at the price point data, this is the same thing that we were showing for the Denver market. It just in the luxury market, it is a really heavy buyer's market right now. And I think a lot of that is due to people in Boulder in many cases, especially if they're into those, luxury doesn't really happen much until about, 1.5, 2 million in the Boulder market. People with that kind of money, they can really sit still and be patient, right? We've seen this in years past. We've seen this in recessions past, right? In the Great Recession, Boulder market didn't really decline in price, right? People just sat still if they were in a position where they didn't have to do that. I knew people that were carrying two mortgages through the majority of the recession because they could and they didn't want to sell at a decreased price, and they had the flexibility to do that. And you've really seen that in the lower price points in this market as well. I mean, tons and tons of demand. There's just not a lot of reason to put inventory on the market. If you look though, there's a big section where there's a lot of opportunity right now, just like Denver Metro, but even more so. That 1.5 million to 800,000 market where it's fairly balanced right now is a great place to be able to trade up in Boulder County. And you see this in Denver County as well, but more so in Boulder because there's some pretty large gaps between an $800,000 home in the Boulder County market to something in that 1.2, 1.5 million. Not only that, but there's a lot of products in that price range, right? I mean, the amount of product comparatively to the overall market, just in that 800 to 1.5 million range, it actually represents a very large portion of the market.
Well, and Boulder County, to get something that's a nice home that might have some extras like a good view or back into some sort of open space. It's remarkable just where if you increase your price point from say 800 to 900, the doors open so magically with better options in some cases. That it with money being as cheap as it is, with interest rates now below 3% if you shop it well. It really speaks to being able to increase your budget a little bit if you can. When you're paying for an extra 100,000 in purchase price, if it's costing you maybe like $380 to $410 a month, it's sometimes a pretty easy argument to make considering how much better of a product you can get just by moving up an extra 100,000 as well.
Absolutely. And if you look at the days on market, it doesn't really seem to matter what price point you're in. It is very competitive in Boulder County, even in that 2.5 to 3 million range. Once you get into the ultra high end luxury, it's a very different story. But you look at 3 million to basically 300,000. I mean, everything is very, very sought after. Good product that's coming on the market is selling. And we're starting to see luxury move a little bit more in Boulder County too, which we didn't see during April and May. People kind of hit the pause button a little on luxury, and it's really started to ratchet back up in price ranges. So as things have come out through June and what we're seeing under contract in July, it's really, really promising to see that the higher end luxury is really moving as well.
And the stock market, bouncing back as quick as it did, certainly helped, with that higher end market where a lot of people do dip into those funds to do down payments on homes.
Absolutely. All right, let's move over into El Paso County. You want to talk about this one?
Sure. Yeah. El Paso County, home of Colorado Springs, they've been, kind of, last couple of years, they've been kind of our outlier in that they've exhibited, extraordinary growth, even compared to some of the other markets in our Front Range area. So, like the rest of the country, they're, the listings are down, because of that, but it's a much lower, dip than in other places. Sold listings down only 3% on the single family side, but for townhomes and condos, Colorado Springs is a military based market. It's a market a lot of people move to from out of state because it's got the affordability that a lot of the other places along the Front Range don't. And so townhomes and condos are becoming more of a product down there. And you can see the fact that they've got almost a 21% increase in sold townhomes and condos is a remarkable leap considering a lot of the rest of the markets are still, in that negative range for sold as well. Median sale price for single family homes is now up 10.4% from June 19 to June 2020, which I believe is our leader for all markets right now. And, the median sale price, even for the townhomes and condos, year over year, it's looking at a 4.8% increase. And, when you think about that, that's interesting, but, that's also reflected in year to date. Year to date, it's still 10.2% for single family homes increase in median sale price. Median sale price for townhomes and condos year to date is 9%. And I'm pretty sure that last year they were at a 9% increase from the year prior too. So you cannot be you're not going wrong by buying a property in the Springs. And that's been remarkable to see, just the massive leap in price. I mean, I don't know, Anthony, I'm guessing here, but I'd say that the median sale price in when we first began this Front Range podcast for El Paso County was probably about $305,000 for a single family home, or $320,000 for a single family home. And now we're at about $365,000 for a single family home.
Yeah, fair enough. We've been doing this for about a year and a half, and you're seeing those kind of increases. It's pretty impressive. And there's a couple other things on there we really haven't touched on in the podcast yet. And that percentage list price versus sale price, it's over 100% down there. It's the only market, and it's just continuing to go up. That's what's really driving those average and median sales prices up. Back in the middle of, let's call it 2016, 2017, you were seeing those type of numbers in the metro area. And because it's so affordable down there, there's just so much demand. And the fact that there's 1 month supply of inventory or less in both attached and detached is just ridiculous, right? I mean, there's no more pressure to be had on the builders out there. They're building as fast as they can, and they're going to continue because no matter what's going on with the economy, that market will probably be bigger than Denver County. What did they tell us next year?
Yeah. Is that the 2022? I think is what it is.
2022.
Yeah.
So,
So a little bit of time, people.
and it'll be just as expensive by then too, probably.
But yeah, I mean that's what I think is nuts is obviously if you look at like June 19 to June 20, there's some changes, but just year to date to see the days on market till sale drop in the single family homes by almost a third is God, it's a screaming market down there. I think it must be kind of maddening to be a buyer's agent right now, because literally you're probably needing to go the exact day it goes on the market to even get out there and see some of these properties.
Yeah, I can't even imagine. It's a tough market.
Yeah.
Well, thank you so much for joining us today. We really appreciate you taking the time out of your day to listen to Front Range Facts. Jim and I are always around to help out. I'm Anthony Meisner with Land Title Guarantee Company. You can always grab me on my cell phone at 303-968-9868.
And I'm Jim Merrion, realtor here at Coldwell Banker, and you can always reach out to me at Jim at ourcoloradohomes.com or my cell at 303-548-0243. And please feel free to email us at frontrangefacts@gmail.com if you'd like to get a copy of this slide deck or have any questions about any of these particular facts. And we'd love for you to check out our other podcasts, Get Real with Blockchain, which has been going on for we're entering our second year with that now, Anthony. So it's pretty awesome. So check it out.
Been fantastic. Fun time. Well, thank you so much, everybody, and have a great day.
Take care.